So children, now after the bills of exchange, after means yes, we have not finished bills of exchange, children. The practice questions for bills of exchange, there are many types of questions that need practice. We will keep doing them, but we'll focus on proceeding with the syllabus. I will keep taking the questions of bills of exchange off and on with you. After every 1 day, 2 days, some homework will be given or test will be arranged, and we'll cover the practice question. All the different type of accounting treatments and bills of exchange that has been covered. So let us now proceed one step ahead with the syllabus. That is financial statements. We come to this chapter, very important chapter for us, that is financial statements. What are financial statements, class 11? Financial statements, this is the basic, this is the crux for which we have been learning the accounting process to proceed to prepare the financial statements. I remember I told you in the beginning, all the journal, see, we have been taking the recording, we did the recording, we did the classifying, we did the summarizing, all these things, and then we made the entries. We are recording, we are classifying, we are summarizing, we are interpreting the results. So recording has been done with the journal, the classifying has been done with the ledger, and we made the ledger and the subsidiary books. Summarizing was done with the trial balance. This is the last step that we come now with the accounting cycle. You remember the accounting cycle? Each step leads to the next step that makes it complete the accounting cycle. Coming to the interpretation. Interpretation. What is interpretation now? Interpretation means finding out conclusions of the financial records. All the financial transactions of the business have been recorded till now. What do those transactions interpret? What do we conclude with those transactions? That has been calculated here in interpreting the results or interpretation. For interpretation, we make the financial statements. We prepare these financial statements. So children, financial statements now will help us to find out two major things. To find out the profitability of the business. Two major things that we do with this is finding out the profitability and finding out the financial position of the business. We make the profit, find out the profitability of the business, and we find out the financial position of the business. Profitability means the difference between what we have spent and what we have earned. That means how much of profit that the business has generated during the year. This is called profitability. So finding out the profitability, how much have we spent, that needs to be that can be brought forward only with the recorded transactions, the recorded financial analytical facts. We have classified, summarized, and now we know how much has been spent. Then we can compare that amount. Suppose we spent rupees 90 in all, and we have generated rupees 100 in all. After selling these goods, after making the goods, we spent 90 by acquiring, processing, transforming the goods into finished products, and making efforts to sell. We spend rupees 90, and we sell these goods for rupees 100. What have we earned? This 10 rupees profit has been generated. This is the profit, and the ability to make regular profits is called the profitability. For that, we will start learning the financial statements. We will make the financial statements. Next episode or next important thing for the financial statements is financial position, to ascertain the financial positions. That means what we possess and what we owe. What we possess means what we have of our own, and what we owe to others. That means all our assets and all our liabilities. The statement that tells us about our possessions and our liabilities towards others. It is called the financial position or the position statement. So we will learn these two important sectors, these two important things of financial analysis in this chapter in financial statements. Let us proceed now. I am taking you to your books. Please open your textbooks. The first statement here. First, let us do the users of financial statement. Whom all? It is not only the business children. Besides the business, there are many other users of the financial statements. The first user of financial statement is the management. Why? Because unless the financial statements are prepared in detail, unless the financial statements have been reviewed properly, the management will not be able to assess the progress of the business and take the decisions for different activities, for the profitable and non-profitable activities. So the first user of financial statement is always the management. Remember, the most important user of the financial statement is the business management. Next important user of financial statement is investor. Who are the investors? Investors are the people who are investing with the business. That means either they are buying our shares, they are buying our debentures, or they are granting loans to us. They are investing. Why will they invest? They will invest with us, they will invest in our business with the hope that we will generate profit and return their investment safe with the rate of return, with the fee on that, charge on that return also. So that is why the investors are placing their trust in us and lending us their money. They are investing. Then short-term creditors. Short-term creditors means those from where we ask for loans. Maybe the banks, maybe financial institutions or other debt-giving agencies. Why are these debt-giving agencies or these banks granting loans to us, children? Because they know that we are in a position to repay their loan. And how do they know that? They will know this only with the financial statements. Then the long-term creditors, it is same as the short-term creditors. Employees and trade unions. Employees and trade unions are interested in knowing the progress of the business or the income earned and the results generated by the business, because they want to raise their voice for the hike in their wages. They want to ask for bonus. They want to know that any facility can be given to them besides the salary, besides the normal pay they are getting, any other facility that can be demanded. They were promised for some incentives for good profit, and the business has generated good profit, so they will ask for that incentive. But how will they know that the business has earned good profits? With the view to financial statements. Then the government is interested in knowing the financial statements or in viewing the financial statements of business, because government needs to levy taxes. Government announces or withdraws concessions or imposes duties on the business on the basis of the financial statements. Tax authorities, yes, for the taxes, income tax, sale tax, excise tax, different taxes and custom duties, the authorities need to view the financial statements. And there are many other users like trade associations, consumer organizations, researchers for different purposes, for their own gains. They want to know the results of the financial statements. Now coming to the types of financial statements. Financial statements, children, I told you there are two sets of financial statements. The financial statement that records that views our profitability. This is called the income statement. And the financial statement that records the financial position. This is called the position statement. Statement, position statement, or it is also called the balance sheet of the business. Now let us start with the income statement. The first sector, we start with the income statement. Income statement, the first statement of first type of financial statement, or the first sector of financial statement, is the income statement. Income statement, children, can be learned in two parts. The first part of income statement, that is called the trading account, also called the goods account, trading account, or the goods account, or also called the manufacturing account. All mean the same. The second part of income statement is called this is the profit and loss account. The profit and loss account. Profit and loss account, this is the actual account which will lead to finding out of profits. Okay, now let us proceed. Now what is trading account? I told you the first statement. We start with the first statement, trading account. What is trading account, children? Trading account, as the name only reveals, trading account or the goods account, that is, this is the account that is recording the direct expenses. The direct expenses. Direct means the manufacturing expenses. All the expenses that have been put up, that have been accumulated to make the goods, manufacture the goods or acquire the goods, are called the direct expenses. So the difference between the amount that has been spent in raising the goods and the amount that has been, that means the purchases, and the difference between the purchases and the sales. In simple words, it is a difference between the purchase and the sale. Difference between how much has been spent on purchases of the goods or amount of manufacturing. In case we are not purchasing and selling, we are manufacturing, then amount spent on manufacturing of goods till the goods are sold. This will be called the the gross profit. This profit is called the gross profit or the direct profit. Just come to your textbooks here. See, if the amount of sales exceeds the amount of purchase, it is called the gross profit. And on the reverse, if the amount of sale exceeds the purchases, it will be called a sales, means you are earning more, that is a gross profit. And on the reverse, in case the purchase amount, what you have spent in acquiring the goods here is more than what you have sold. You acquired the goods for 100, you sold them at 90, then it is a gross loss. It is called gross, means we have not yet sold them, but the goods have been made ready to be sold. That is a gross profit or gross loss. Then now we start making preparing the trading account. Now see here, trading account, these two accounts, children, are T-shaped accounts. T-shaped means it is in the form of the English letter T with two sides. The left side called the debit side and the right side called the credit side. This is the trading account. We have learned this. This is similar to the ledger account. This is the format of trading account. We write trading account. It is important to write for the year ended. I do not have space here. We will write for the year ended. For the year ended so much. This trading account. So what do we write here in trading account? We record all the direct expenses. We start with opening stock. We have the opening stock. We record all the direct expenses in the trading account. Now direct expenses, the first thing is all the amount that has been spent will come here. To opening stock, to purchases. Purchases will be, remember, it will be net purchases. In case there are some purchase returns, they will be subtracted. So purchases means the net purchases. This will be the amount that comes here. To wages. To, in case wages or wages and salary, it is written there only wages or wages and salary. You will have to go with the first word. We have learned this all in the ledger account when we were making. And in case any carriage, you just have to see, girls, what are the expenses that will come here. Expenses that are involved in manufacturing or raising of goods will come here. Carriage or carriage also, carriage, only carriage is given, it will come in trading account. Carriage on purchase is given, that is also direct account. In case carriage inward is given, that is also this account, the trading account. In case the gas, fuel, power, that will also come here. To freight, to freight and cartage. Any factory lighting, factory rent, dock charges or clearing charges. Then you have the import duty. In case import duty, it will come here. To royalty. What is royalty? Royalty is the amount that you receive for publication. The profit earned in writing a text. I write a novel, I write a story. So I'm the author who will get my business is just to, my purpose is just to write, and the writing is, script writing is my work. Getting it published, circulating, selling, all that is the work of the publisher. So he will enjoy the profit. So what does the writer gets? Writer gets this fee called royalty. The profit that is generated for writing scripts is called royalty. And on the credit side now, credit means the incomes. Remember, this is a nominal account. Debit all expenses and credit all incomes. So we write here, the only income that comes here is sales. Yes, sales means the direct sales. In case any returns, sales return will be subtracted and the net sales will come here. Then we have the closing stock. Opening stock here, closing stock here. Then in case, now comes the last thing, the most important thing. In case all the expenses, these are the direct expenses and these are the generations, the income generated by direct expenses, sales and the stock that is left to be sold. We take it on this side. In case expenses are more than the sales, it will be, this is more. So balancing figure will come this side. It will be called gross loss. But in case the sales and closing stock, this side exceeds this side, it will be called to gross profit. And the account is tallied. It is very important. All the direct expenses this side, the direct earnings, direct income, that is only sale and closing stock. Only two things you write here. Remember, sale will be always the net sales. You subtract from the sales and the closing stock total, you subtract all the expenses, direct expenses. In case sales are more, it will be a profit. In case expenses are more, direct expenses are more than the amount that you have generated in selling, then it will be gross loss. So gross loss or gross profit is the balancing figure and our trading account is done. The first step is done. I hope you are understanding, children. Please keep following. Now your work is just to understand. In your textbook here, see, all these things have been given in detail. You have to learn all these points. Preparation of trading account, the users, all this is the theory. It is not learning word to word. Theory is not required. You just have to understand what means what. So wages, carriage, manufacturing expenses, all these things do not have to be learnt. They just have to be understood that what does this mean, and then you then you make the trading account. The format will be prepared in this manner. You just have to learn the format. Clear? Okay. Thank you, girls.